Picture a $1 bill. Now imagine a stack of 53,000 $1 bills. This is the amount of money Roaring Kitty, aka Keith Gill, invested in GameStop in 2019. It would be about 19 feet tall, roughly the size of a 2-story building. Next, imagine a mountain of 820 million $1 bills. This is the amount of money Keith Gill had in his GameStop position 4 years later. This staggering amount would reach 55 miles high, touching the thermosphere near the edge of space, twice as high as the world record Red Bull space jump. Wealth like this, you've only seen in movies. And they've made movies about Roaring Kitty. However, they got it all wrong. They didn't have all the facts, and they didn't really show you anything you could use as a retail investor or an everyday person to emulate what Keith did until now. I've tested, written out, and assembled Roaring Kitty's strategy for free right here. After studying over 700 hours of Keith Gill's videos over the last 4 years, I can explain his philosophy, his methods, and his history that landed me one of the best stock plays ever in my investing career, leading me to find and buy Meta stock when it was at $88 at the absolute bottom using this same criteria. I even posted my thesis and updates like Keith did on Reddit. But I will also go over what costly mistakes I made along the way, as well as what current value stocks I think could potentially take off even more. Now this part is very important, because if I had known what I know now about this strategy and philosophy, I too would have held my GameStop position from August 2020 at my $1 average into the final part of the same squeeze I predicted. On this journey, we will also go over the unknown history, uncover the artifacts Keith left behind for us. These clues that could help anyone win the game if they had the same skills and applied them to their investing philosophy. So how did Keith Gill, Roaring Kitty, win the game? He's just dumb money, right? Some might say he had the game of life on easy mode, and consequently, he must have had some advantage that you don't have in the markets. Keith must have had a hedge fund helping him, or a Bloomberg terminal, or inside info. After all, the stock market is a rigged game, right? And you're left funding the company's next stock dilution, all because you're just another retail investor. Dumb money. Now remember, not every investor can do this. That's just the unfortunate part of the game. But for those of you who make it with me to the end of this video, you will have all the tools you need to start your own journey and potentially beat the game. Keith Gill would spend most of his college time studying, posting in online running forums, drinking beer, and running. But he was actually a very talented All-American athlete. In fact, he's likely the fastest known retail trader of all time. He was less than 21 seconds away from the all-time world record indoor mile. He had a hyper focus on his running career that would soon translate into investing. Keith would spend hours in the early 2000s on an online message board for running called Dystat, leveraging this message board with like-minded people. He even made such a name for himself there with the screen name Wizard, which we will connect the dots later as to why he chose this name and how this all relates to his investing philosophy. It wasn't until a career-shattering injury that would bring his fanatical work ethic and focus on something else at the absolute worst time. Or was it?
It's going to be the end of the world, Bill.
As you may know, the global financial crisis was just getting started.
Guys, we are looking at an unprecedented meltdown here. I've never seen anything like this.
That's the beginning of a much deeper correction.
No! Bear Stearns is fine. Do not take your money out. This is written.
And this was the time Keith was set to graduate from Stonehill College and pursue a financial career.
Kramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! And they are losing their jobs, and these firms are going to go out of business, and he's nuts! They're nuts! They know nothing!
While Keith was coming to the realization that his running career would end, he started to hyper-focus on investing. During this time, Keith had maintained his Series 3 and 65 which meant he could sell future contracts and options and could act as an investment advisor for compensation while most people were exiting the financial markets.
I guess I could have closed a run on the bank and say, take your money out of there. I guess people could say, hold it. He's not saying, take your money out of there.
By July of 2010, Keith was already vice president of Debris Publishing, an independent financial publishing firm that built a program that would help investors analyze stocks and offer a one-stop shop for research. TV would never take off, unfortunately, and would later move to the public domain under an MIT license. With extreme detail, Keith would dig through a company's financials, focusing on its real long-term value versus the market sentiment and popular headlines at the time.
So now what we have to think about is the downside, right? This is the duty of the security analyst, in particular the value investor, is we need to make sure that our downside is covered. And this is the asymmetric upside that we're pursuing. And herein lies the downside protection, right? The stock price trades at about 60% of book value, about $6, $7 per share. And if we pull up the balance sheet, and if we were to go through line by line, we'd see, first of all, that there's about $435 million in book.
By 2012, Keith was more than just an all-American competitive runner, a fintech startup co-founder, and a licensed financial analyst. He also was a world champion wizard player. This is where players predict and play their cards strategically, aiming to outmaneuver their opponents to win the game. Sound familiar? Well, it should, because for Keith, Wizard was more than just a game. It was a training ground. Here, predictive skill, strategic thinking, and risk assessment were cultivated to perfection. Translating these skills into the world of investing, he navigated the markets with the same precision and confidence that defined his Wizard gameplay, earning him the title of Air Wizard and Mr. Wizard after winning multiple world championships. Keith traveled across the globe every year to compete against other champion wizard players, gaining fame from the game. Keith treated everything like a game, but it was never really about the money.
Surprise! GameStop's up about 5x from when I uploaded those videos over the summer, so that's great to see. When you have a thesis and by and large it unfolds as you hope that it could. This was a true YOLO for me. When I was building this position last year, we had nowhere close to $1 million.
It was about developing a strategy and thesis to find deep value stocks and winning by being right. Stocks that Warren Buffett would call an obscure investment with an unusual mispriced opportunity with the lowest price to the discounted cash of the future.
So I would say if you're working with a small sum of money and you're really interested in the business and willing to do the work, you will find something. If you were, there's no question about it in my mind. You will find some things that promise very large returns compared to what we will be able to deliver with large sums of money.
Well, yeah, I think that's right. A brilliant man who can't get any money from other people and is working with a very small sum probably should work in very obscure stocks, searching out unusual mispriced opportunities.
A stock that Warren Buffett couldn't buy, but you or me, an everyday retail investor, could. A stock that could do parabolic gains if the investor was right. Keith mentioned that during this time before investing in GameStop in 2019, he'd invested in many stocks that ran up more than 1,000%. However, he also invested in numerous stocks that delisted. But this is all a part of his philosophy and why this strategy is aggressive and not for everyone. During the next few years before Keith invested in GameStop, he not only tracked these deep value stocks on a daily or weekly basis, but also followed the price action on the stocks, the technicals, which helped him analyze trends and prevailing sentiment.
I love pulling this up, scrolling through all the charts, boom, boom, boom. I also have bookmarks for it. This is why everything, you need to have access to everything.
And above all else, overall market sentiment, so that when the opportunity presents itself,
I'm ready to act. I'm prepared to pounce, if you will.
Tracking is one of the most important artifacts of Keith's trading philosophy and mine as well.
Some stocks might be up here because I have a high conviction in them. Some of them might already be doubles or triples, like OVV it turned out to be a great pick for me.
He started to memorize the stock tickers and track how these stocks traded, their histories and the financial outlook. He would track their valuations, the free cash flow, the debt, insider buys and sells, and track institutions that were also buying or selling the stock. Now, there are far easier ways I use to track my deep value stocks that you can save time by using these screening tools that will help you narrow down thousands of stocks into a few that meet Keith's criteria as well as mine. The same system that Keith was trying to build at the early startup. Now, I've created a deep value screener via TradingView that I will share with you for free down below. I will share it in the link in my Discord, as well as the option tracker I use to find major option plays for free, and how to use it and build out and track your option plays. Furthermore, stick with me because one of the most important things Keith did in evaluating a deep value stock was mitigate the risk for potential bankruptcy. This was a big thesis point for GameStop. Stocks often trade at a major discount or have been on a multi-year downtrend because they usually deserve it. They're there for a reason. However, they usually have a lot of debt. They're also at risk of bankruptcy oftentimes, or they operate in a cyclical sector. Often, management has given up on growth, which is the most common reason stocks peak and then drop. They either take on too much debt and they'll eventually delist if this happens. Thus, we need to mitigate that risk and find stocks that have parabolic upside with limited downside risk, usually in the form of cash, positive free cash flow, new activist investors, new management with skin in the game, the stocks where retail is capitulated and overall sentiment is at rock bottom. Keith would scream for these type of stocks that he thought had one last puff in them.
And that, like GameStop, isn't a cigar butt. It's more of a roach, right?
However, a catalyst in the overall market is when you, the ones that have prepared and saved up, are ready to pounce. As Keith said, buying up stocks when they are at their lows. And the best part is, you don't have to be right on every stock. So when do you buy? Well, that's up to you. But Keith, like myself, is usually early. Thus, if you can start buying after the dust has settled from a major drop, then you might have found a winner. So it's 2019. Keith is unemployed. He had to dissolve the investment firm he tried to create and was forced to end Kiwi because of lack of funding. He was making just under $40,000 at this point. And to make matters more stressful, Keith had married Caroline, the love of his life. He would soon have a daughter along the way. So he began actively analyzing a wide array of stocks.
But there were significant periods when I was unemployed. I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing.
This would keep him in the game just long enough before he leveled up in April of 2019. This was around the time he accepted a financial education job at Mass Mutual, so he continued that year in 2019 analyzing stocks on his own time, and he invested his family's funds. Soon, he would find the stock, the key that would change his life and potentially yours forever. In his testimony, he mentioned that his father was a truck driver and his mother was a registered nurse. He didn't come from money at all. He stated that in 2020, he was happy to visit his family in Brockton for the holidays and give them the great news that we were millionaires.
Cheers to my lovely wife. Can we get it in there? Cheers, 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 cheers. Happy holidays to everybody.
As we will soon find out, Keith had actually ended up making a few $1 million over the next 12 months into 2020 when GameStop was still under $1 post-split. This helped Keith hold on for the entire GameStop ride. So June of 2019, Keith would buy his initial $53,000 in GameStop leaps that June, and this was soon after Dr. Michael J. Burry, the Big Short, another deep value investor, started to buy up shares.
Great, Michael. Whenever you find something interesting,
we all tend to make money. What stock are you valuing?
No.
GameStop. And I know it's a polarizing stock. Some people won't even tune into the stream right now when they hear that I'm bullish on GameStop.
This aligned with Keith's thesis on GameStop.
They've been doing mostly the right things over the past year. Plus, they have Michael Burry's support. You're really gonna question the guy who gets his hair cut at Supercuts and doesn't wear shoes? Shit, I'm not.
Dr. Michael J. Burry had sold his 2018 position just a quarter before he decided to reinvest. But this confirmed that Keith was right about how undervalued GameStop was still, and how with the right plan they could turn the ship around. But again, Keith continued to trust in his thesis. What was about to unfold would be the opportunity of a lifetime, something we can all learn from. But an opportunity that could be only realized with a strong investing philosophy. And you, now having your basket of stocks, the ones you've been tracking, are ready for the next level.
It's the first circuit breaker. The bell tolls.
March of 2020, when the world markets churned into chaos during the Ides of March, stocks plummeted across the world. Keith's GameStop option contracts would essentially be perceived as worthless. as the largest stocks in the world fell with the entire market.
We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. I also want to say that I support retail investors' right to invest in what they want, when they want. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company.
Stock is about to collapse. You want to owe? I can still get you out now at a total loss.
Black Monday. World markets had already fallen nearly 20% the day prior. And on this particular day, the markets fell 13%, halting and ending trading. But I remember posting that this was going to be a once-in-a-lifetime opportunity to make millionaires, potentially. And I was right. The market had already dropped 30% in a matter of days, and nobody knew where things were going. Keith continued to hold GameStop options even after a few of these options expired worthless. A couple of weeks later, GameStop on April 6th would drop as low as 70 cents post-split. But what would happen 8 days later would forever change the markets and Keith Gill's life. Keith was buying up hundreds of stocks during this period, but some of these stocks are up thousands of percent to this day. Later, I'll show you how my calculations would be proven right 4 months later after Keith revealed his portfolio was already worth $2.5 million. And remember, this was 5 months later after this major crash. And GameStop was still near $1 at this point. Now, this is the time when you as a deep value investor can make life-changing gains. Nevertheless, many of Keith's other stocks had already gained hundreds of percents in profits in this short amount of time. August was around the time Keith would start to post on YouTube. He posted his thesis for GameStop and how the stock had almost 100% short interest. This was also around the time I bought into GameStop around a $1 average because I believed the short squeeze was coming. It was guaranteed. Keith would lead a revolution against the greedy billionaire hedge funds that have been cheating the game for years. When GameStop was $1.01 on August 3rd, 2020, Roaring Kitty's portfolio was already worth $2.5 million. His GameStop position was down 61,000 at that time. Now, Keith had about 5.81% of his portfolio in GameStop, about 146,000 in shares and options that day. But this was when GameStop was still $1. This would be the last time his position was ever down, as the following updates, they started to run parabolic. And by this time, Keith was already a millionaire from finding the bottom, something he had prepared for years in advance. This helped him hold on for the entire ride when that position was down over 50%. This artifact is the most important because having a community not only supports your thesis, but challenges it, and it will help you hold on when you want to sell. But having other sources of income or a basket of other stocks like Keith had will help you endure the coming pain, because pain is a part of the deep value stock investor's journey. Over the next quarter, Keith would buy more shares of GameStop. His overall portfolio was worth around $4 million, although his GameStop position was just getting started. During a Christmas update, Keith showed his GameStop position to be worth $3.6 million, including $1 million in cash alone, bringing him over $5 million profit in his Roaring Kitty portfolio. And during this update, he would soon reveal he was also DFV on Reddit. Now, we all know what happens next. GameStop started the squeeze, the suits manipulated it, preventing the mother of all squeezes. Keith battled the shorts, bought a record amount of stock for a retail investor, and continued to hold, and he sat before a government hearing before he would finally go into a hibernation of meme-making off-season over the next 3 years.
Right now, I need to step away from streaming, spend some time with my family for a bit. Just don't know when or what it will look like. What do we do from here?
That year, the stock market would peak, and tech stocks over the next 15 months would crash over 70%. Giving me one of the best opportunities I have ever had in the entire market. During the March of 2020 crash, I too was buying up dozens of stocks, mainly uranium stocks, that would soon go up thousands of percent. Now, I was a swing trader, so I got out of those uranium stocks, even though I knew that there was going to be a squeeze in that sector as well. I had sizable gains, and I moved into GameStop at the time. This was August 2020, and it was around $1 average that I got these shares. And not long after, I gained a very nice profit, and I decided to invest in uranium again because my thesis started to really play out in the uranium sector. The opportunity I would have in the next year was what I had been training for. Using the knowledge I gained while training with Keith, I had found one of the largest stocks in the entire world trading at 2015 valuations. This was October of 2022. Meta. Now, Meta had dropped almost 50% in months' time. Big YouTubers with billions of views were making videos about Meta's downfall. There was a war going on, inflation was running up, sentiment was at an all-time low, and I went in big. I even printed out Roaring Kitty's GameStop option positions that he had posted on Reddit and studied them. And I used this to be my motivation and kind of keep me in line because the sentiment on Meta was so low. So the stock was beyond undervalued. It had nearly dropped 70% in a short amount of time, making nearly $50 billion from Instagram ads alone. I too would discuss my deep value thesis points on Meta on social media and would speak to my good friend Lewis Morgan, founder of the billion-dollar fitness clothing brand Gymshark, about my deep value thesis for Meta.
Yeah, man, the market's just been crazy. I think we might be getting close to a bottom. I also bought some Meta, dude, at $92. The company is being valued, Meta at 2015 valuations, which is, they only made $17 billion revenue that year. And, they bought Instagram and all that, so WhatsApp, but it actually has brought in, $119 billion this year? Honestly, dude, $92. I still can't believe I got some shares. I got like 1,000 shares or something. Value investing is just can't beat a deal like that. Same thing with Carnival. And I got a bunch of calls as well. I got like thousands of call options on Meta and then Carnival Cruise. And then hell, if we get like a crazy run up in the market, maybe exercise them.
The thing is with Meta as well, yeah, they might need to calm down a little bit on their spending into the metaverse stuff, but that no one can compete at this moment in time with their ad platform. You need to build a business at the moment still, you need Facebook and you need Instagram. And obviously the Facebook ad platform is unbelievable. Yeah, TikTok's great and stuff, but it's still not the same. Continue to make loads of money, so yeah, it's another smart move. I'm also nibbling as well.
I put more into my Meta position than Keith did in his GameStop position into short and long-term Meta options because of what I had learned from Keith. I also bought $250,000 in shares starting at $88 with almost 2,400 shares before Meta broke $100. I believe all that Mark needed to do was trim the fat, cut spending, run ads on Instagram Reels or WhatsApp, and help spread the internet to the hundreds of millions of people without it, and finally cut back on the metaverse spending. Yeah, that spending, the viral day in the life of all the social media meta workers that was going around at the time. I also saw and thanked Jim Cramer for crying at the absolute bottom of Meta's stock price when he went bearish against the stock.
I made a mistake here. I was wrong. I trusted this management team that was ill-advised. Hubris here is extraordinary, and I apologize.
Okay. What did you get wrong?
No, I was right, but I found the absolute bottom. But remember, this is not typical when you're finding a deep value stock. My options within a week were up hundreds of percent. However, the stock had little downside in my opinion, and I would go on to post my thesis when it was $88 on Reddit, just like Keith did. And then I would post my updates on the position like Keith did as well. But this would cost me millions of more dollars in unrealized potential gains. And this was just like my GameStop position that I owned around $1, which would soon be worth an estimated $11 million 5 months later. Now, this wasn't my first deep value stock. Now, I've been investing in the market for over 17 years now. I also found the absolute bottom using Keith's philosophy when I invested in Carnival Cruise. Now, this was at early 1990 prices at the time, and this was just weeks before I invested in Meta actually. And this was mainly in shares and leaps, but I made enough profits when I sold that in the shares and the leaps to actually pay for my entire Meta position in the options. The Carnival Cruise stock was a lot riskier than Meta, but it was trading at the 1995 valuations. I believe there was pent-up demand for travel, and the TSA numbers prove that. And although its debt was big, I believed it had one last puff in it, and that it would recover, and it did. Now, both of these positions were all inspired by Keith and his deep value option process. Now, the most important thing I learned from Keith Gill was something that I finally learned this year, and it was to hold on as long as you can when you find a deep value stock near the bottom. Therefore, I vowed to never make this mistake again and to tell others about it. Now remember, the biggest gains are usually made in stocks in the final 10% of the stock's peak. Now this is a lot riskier time to buy and sell because in the case of GameStop and Meta, at its 2021 peak, it would peak and then drop 70%. So both stocks would lose 79% over the next 24 months. But you and I will eventually have another opportunity like this. They happen.
I don't know the timeline. If you reach out to me and I don't respond, it's just because I'm kind of unplugging completely, but I intend to come back and I just don't know when or what it will look like. What do we do from here? We'll have to see. I hope you've had a fun time and I'll see you around.
May 17th, 2024. Keith Gill would make his big return. But what followed a series of 119 memes posted over the next month. These memes were meticulously edited with music and cuts reminiscent of Keith's past work. This had been Keith's project for the last 3 years. During this time, he managed to grow his initial $40 million into hundreds of millions of dollars. Rumors suggest Keith was buying up short-term options during this meme spree that he was doing. As a result, GameStop's price actually rocketed up to $65, up 550%. And on June 2nd, 2024, Keith updated his position on his DFV Reddit account, revealing a net worth of $210 million in this position alone. Now, I also have a theory that Keith also invested in big tech in 2022, as many of these stocks have plummeted over 70% and then rapidly recovered the following year. Regardless, Keith updated his position 4 more times before going silent again. Now, Keith's unrealized gains reached over $800 million in his after-hours trading, but shortly after, Keith exercised some of his call options to buy more shares, totaling 9,000,000 shares. Keith now holds the same number of shares that CEO Ryan Cohen once had in GameStop before the first squeeze. And this was a nod to the famous Dragon Ball Z meme, over 9,000. Now, Keith owns approximately 2.2% of the GameStop. So GameStop has transformed into a stronger entity today, holding more cash, better leadership, and actually profitable. So the key pillars of Keith's initial thesis are now realized. Keith envisioned Ryan Cohen steering GameStop towards an innovative future, possibly making him like a new Carl Icahn activist fund. And with nearly $5 billion in cash, half its current market cap, the potential for strategic moves is immense for GameStop. So the ongoing issue with naked shorts and market manipulation remains high, and presenting another opportunity for GameStop to experience a potential parabolic run. But in a surprising turn, as Keith does, he revealed his belief in Cohen's vision by posting a dog gif followed by this 13G filing saying that he had 6.6% of Ryan Cohen's former company Chewy. While it's not confirmed if Keith sold his GameStop shares, some speculate that he did in order to buy these Chewy shares. But with his last meme posted on X, it actually shows him taking the Andy doll from Toy Story and throwing it down, the Woody doll, and it actually has the Chewy or the dog's face. So some think he's back in GameStop, or he may have never even left.